So realized vol, as we mentioned last week, was coming down. It was down to the 40s. Now it's continued down to, say, the low 30s in Bitcoin. So you see that in that big drop in the yellow line, which is our 10-day. We look at the 10-day realized. We think the 10-day time window is quite a good window because it captures kind of what's been going on over the last couple of weeks. And it's relatively fast at reacting as well when the game changes. So this drop from kind of mid-60s down to 30 in realized vol. Implied vol was actually flat to slightly higher on the week. So that's why I've got these red bars that are showing positive carry now, looking at about 17, 18 vols of positive carry on Bitcoin, which is the highest we've seen in quite some time. Now, the Ethereum realized has been better. It's been a touch higher in the mid-30s as opposed to the low 30s. We are starting to see a bit of excitement building around the idea that Ethereum can kind of break higher and isn't going to be pinned as much as it has been this year. So implied vol, especially in ETH, did rally. That's in deep. That is also in deep positive carry. Similar sort of story about 18 vols. And we do think that is going to bring gamma sellers back to this market. We already saw some gamma sellers in November Bitcoin. And yeah, with these type of carry numbers, it's quite enticing for the gamma sellers to come back. So unless you get a big move, there's quite a lot of theta coming your way if you're a gamma seller. So it's quite attractive. Now, overall, crypto markets continue to decorrelate from stocks. Stocks were up pretty heavy last week, and crypto did, apart from Ethereum, Bitcoin didn't really participate in that. The rise in the bond term premium that we had seen was arguably a bullish factor for Bitcoin. So as we saw yields come back down, that term premium potentially coming back down, then that can take some of the steam out of Bitcoin. Okay, so maybe that's one argument to say why Bitcoin couldn't participate with stocks, because if the term premium was coming back, then, you know, gold, we have seen gold pull back a little bit as well from its highs now. It was holding up there because of the dollar, but it has pulled back down to around 1965 today, and it got above 2000. So maybe Bitcoin kind of getting dragged back or held back with the fact that gold not trading that well. Okay, so that's what I'm seeing in realized vol. If we move over now to the term structure, these are shifts in term structure on the week. You can see Bitcoin front end down about 3-4 vols. So you saw a drop in the front end, but anything sort of past 1 month was higher. Back end was quite considerably higher by about 4 vol points. So the Vega part of the curve still bid. People still happy to buy longer dated calls, but the gamma not performing, which is why any expiry kind of with November on it was getting sold. So that's what we're seeing, a more steepening, more contango back into the Bitcoin surface. Now, Ethereum saw a different sort of move. It was pretty much shifting higher across the curve. It was still led by the back, which was close to a 10 vol uplift in the long dated stuff. March actually being the sweet spot with the most bid. And the front end was also up 3 to 5 vols as that gamma was performing a bit. It wasn't performing amazingly. It is implied at 50 and it was only realizing 35, but they were still happy to own it. I think there was some speculative buying in super short dated calls trying to play the ETH breakout, and that's what kept that stuff relatively bid. Okay, but it is a flow driven move. You know, the market seems to be anticipating something's going to happen in ETH. And also a lot of the supply that we've seen in ETH has kind of taken a back seat and gone away for now. Okay, so here's the vol spread. So the ETH Bitcoin vol spread obviously has been negative for some time now. We've been going on about it every week. It's been understandable because the Bitcoin narrative was the driver and ETH really didn't have a story. As the Bitcoin thing has been priced in and Bitcoin kind of settles at this new equilibrium up here at 35, now that ETH is starting to show some glimmers of hope that it wants to rally, we have seen a shift. So we've seen the front end really catch a bid here. So the front end vol spread is above 5 vols and the back end is back to neutral, right, or very close to neutral. So that's quite a major repricing. The realized vol spread has gone to about 4 in the 10-day. It still remains in favor of Bitcoin on a longer dated 30-day. But remember, that's why we look at the 10-day quite closely, because it's faster to adjust to what the market's doing now. So it's a bit more informative. So we've seen this flip back up into Ethereum premium in terms of that vol spread, ETH trading over. We haven't seen that for some time. Obviously, that's what always used to be the case. But you can see since the summer, we've been gradually going lower and lower and lower. and we got to like 10 vols Bitcoin over not too long ago. So interesting to see ETH vol coming back with a vengeance and starting to show that it might want to have some of its old type of moves that we haven't seen for some time. Okay, it was helped by the fact that the Ethereum Bitcoin cross rate bounced off major support levels. Also, dealer positioning is lighter in ETH now. That call seller that just kept drilling calls to the street every week, every month, they've kind of stopped now. They've actually stopped out of their position. So that should make ETH more free to move and could be the beginning of a return to its old ways where it used to consistently realize more than Bitcoin because it is just a higher vol asset. It's not as liquid spot-wise as Bitcoin is. So therefore, there is going to be more market impact when there are flows there. Okay. And like I said, ironically, I think the final the final Bitcoin ETF approval may actually provide more fireworks in Ethereum than it does in Bitcoin, which will be quite interesting. But that is what the options market is kind of pointing towards right now. Okay. Right. So that's what I'm seeing in the RV side. And then if we close it out with SKEW, so Bitcoin SKEW stable for a change. Remember, SKEW is very volatile in crypto. It kind of chases spot wherever it goes. But spot's been sitting still all week, and the call premium in the SKEW has been very stable at around 6 to 7 vols across the whole curve for Bitcoin. Now, obviously, the market is still anticipating some sort of spike on the final confirmation, which is why you've got that call SKEW. ETH SKEW was actually a bigger mover. The front end calls that had kind of normalized a bit have caught a bid again, a huge bid. They've gone to 10 vol premium in the front end, which is the highest level we've seen all year. I was on Twitter saying that at the weekend that these things were going ballistic, and it was kind of leading the move up in ETH. Now, this call SKEW can go crazy. It can go to 40 vols, 50 vols even, okay? But we're talking about in 2020, 21, when crypto was going parabolic. So in the more orderly world that we're in, a 10 vol call SKEW in the front is actually quite material, I would say. So that's why I flagged it, because I do, in the context of what's going on these days, that is quite a big move, and it might have some signaling value, right? And it just shows you the forward-looking nature of the options market, right? It reflects that the call overwriters have kind of thrown in the towel. They're not supplying topside in ETH anymore in big size. And so dealers aren't as long inventory anymore. And that means that as we do rally, we don't have as much gamma pinning the market. So realized vol can go up, and then we don't have implieds hitting the street. So implieds can actually reflect what the realized is doing. So interesting to see that. And it's basically ETH becoming a bit more organic in the way it's trading rather than kind of being manipulated or held down by these massive call overwriters that just kept coming back for more and more. Okay. Strategy Compass is saying sell calls. We have actually been call overwriting against our positions with super short dated calls, which have worked okay. So yeah, we don't think that's the worst idea in the world. If you're long this stuff, overwriting it has kind of been successful for the last week or so. And obviously with ETH starting to rally a bit now, it's coming into bearish risk reversal territory. Personally, I'm not a fan of that because I do think ETH has got some catch up still to do, especially if the ETH Bitcoin spread rallies. This thing could easily outperform by 10%. So I'm not going out fading ETH. In fact, I'm doing quite the opposite, which you'll see in a second. Okay, so in terms of flows, Bitcoin volumes were down, came back to earth, about half of what they were in that crazy 12 billion notional week, back to around 6 billion, but it's still pretty healthy volumes. General theme was one of November and December calls in the 34 to 35K strike range. They were getting rolled up. So we got 34 here, 35 here. They were all getting rolled into these higher strikes in December, January, March, 37K to 42K strikes. We also had some call spreads. So this area, and you can see the heat map here is quite nice. You can see the at the money. So the 35 to 32 area was all red, which means that was generally getting sold throughout the week. Then you've got the buy zone, which is 37 to 42, which is all these blue bars, saying that these calls were being bought as the at the monies were getting sold. That's a roll up of calls. Then you've got these big sales at 45K here, which are showing you that people are buying call spreads as well, where they're buying these strikes in this zone, and they're happy to sell the upside past 45k, which is basically in line with what I'm saying. I don't think it's realistic that after the approval we're going to smash up to 50k. So people are quite happy to sell that 45k strike because they get some premium back for it, and they don't really think that's in play, basically. And then lastly, you got this blue bar here down at 29k, showing you that some crash protection was bought as well in the super low delta out of the money stuff in November. You can see that sitting here in this purple line. That's a November downside that people are obviously systematically buying for protection or whatever it may be. Okay, so those are the main flows that we saw in Bitcoin. In terms of Ethereum flow, we saw similar story with the volumes dropping about 40%. Call overwrite has continued to cover their short, and therefore that kept a bid to the vol. But we also saw a load of fresh buying. So fresh buying, particularly in November expiries, as I said, people trying to play the part of the curve that gives us the most leverage to a breakout higher. So if you think ETH's going to break out higher, then you're not going to go too long dated on that because those options are still quite expensive. Whereas if you play like 3-week options, you can get some amazing leverage if ETH suddenly finds itself at 2200, which is not completely out of the question if it wants to rally. Okay, so that's kind of what we're seeing there. Long dated call spreads, also those orange bars, was a 2,800 call spread to March, which still offers you pretty decent leverage. Okay, so those are the main ETH flows that we were seeing. If we then go to gamma positioning, so the gamma positioning was diverging. If you remember, generally it was long ETH and short Bitcoin, which is why Bitcoin was out realizing. Not so much the case now. We've seen Bitcoin stay in short gamma territory, but not as deep. So here it got on the 1st to the 3rd of November, it got pretty short. Then it recovered to flat, and now it's a little bit shy of flat. So it's still short, but not massive. You can see quite an even distribution there of all the strikes that the dealers have got on. Really, the big short strikes kind of come into play if we were to break 38k on the upside, which is a good 10% away. So without doing that, we're going to say that Bitcoin gamma positioning is going to be fairly stable. On the Ethereum side of things, it's a bit of a different story, right? So you've got some long strikes in those downside 1650, 1700, but then all of the other strikes are quite big short now, which is not what we're used to seeing. So you've seen the gamma positioning flip below the zero line and actually go negative in Ethereum for the first time in ages, right? We'll see how long it stays down there. But given where the strikes are and the maturities of those strikes, we've got 24th of November, we've got December here, and we've got some of on the 10th of November for this Friday as well. So in general, I think that short gamma might even increase if we're hanging in around that 1900 area. And if that short gamma increases, maybe that means the realized vol increases as well. So something to be aware of, but very different setup to what we're used to seeing in Ethereum, which is what gives us more confidence that yes, Ethereum's vol might be back for a bit here because the supply's dried up, the streets got taken short, and that's going to fuel a bit more realized than we're used to seeing. Okay, so the stars are kind of aligning there for Ethereum to start moving again. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.